I'm giving you guys 10 steps to become a better and more profitable trader here in 2024. And step number 10 is by far the most important, so make sure you watch this to the very end. All right, so let's dive into it. Step number 1 is going to be really improve your ability to identify key zones of support resistance and institutional supply and demand on your higher time frames. These are going to be key zones and key areas that you can see the stock move to intraday and then something take place off one of those zones, whether it's a break and retest for the next leg up, whether there's a reversal off one of these key zones, right? Your goal is to really improve your ability to identify the most important, most significant key zones of support resistance, supply demand, right? And those are the zones that you're looking to trade off of intraday. Become confident in these zones, become convicted in these zones. All right, number 2 is going to be waiting for the market to come to you. So step 1 was identify your zones. That's your pre-market preparation. That's everything you're doing before market open. Step 2 is let the market open and then let the market come to one of these zones first before even considering taking a trade. And the reason for that is so many traders get in at pretty random levels, and no wonder they're losing all the time. Sit back, be patient, be disciplined, and wait for the market to come to you first. All right, number 3 is going to be your ability to recognize certain setups and certain strategies that could be presenting themselves at these key zones when the market comes to you, right? So you need to learn probably the top 2 to 3 reversal-based strategies, and then learn the top 2 to 3 trend-based or momentum-based strategies, right? Strategies and setups that could present themselves off of these key daily levels. And then step number 4 is the most important, right? Because trading is a game of probabilities, and this is how you increase the probabilities on your trade. Identifying confluences. And basically, to keep it simple, a confluence is just a reason to take a trade. So you want to have as many separate reasons to take a trade as possible. So that means you want to have as many confluences on that trade as possible as well, because that's going to increase the probabilities that the trade actually goes in your favor. So what's a confluence, right? What's a reason to take a trade? It's just a form of technical analysis. Could be an indicator, could be a tool such as a trend line or a Fibonacci retracement or extension, right? So what you want to do is identify your confluences. Okay, the stock's at a zone. I recognize this setup presenting itself, but what else validates this trade? What other reason do I have? Is there a downtrend? Is there a Fib retracement? Is it sitting at the VWAP, or is it pulling back to the 9 EMA, right? You want to have as many separate reasons as possible. So identify your confluences to overall just increase the probabilities that the trade's going to go in your direction. All right, number 5 is going to be learn how to read price action, order flow, and then understand how price should be developing based on that strategy off that zone. That's huge, right? Because order flow in reading the price action is going to help you validate an entry on that trade, right? You can go through the entire process, wait for the market to come to you, to a key zone. You see a great setup, you have all these confluences, but the trade may never validate itself in the first place and give you a buy signal or a sell signal. So you need to learn how to read price action and order flow to again help you validate when to enter the trade at the right time, and if that trade's even worth getting involved with in the first place. All right, number 6 is going to be trade plans. So many traders do not build freaking proper trade plans. They are just trading blindly. They're getting in at random places. They don't have stops, or their stop is in the wrong location, right? They're taking too much risk, or their stop's too tight because they're scared of losing and they get prematurely clipped. They don't have targets, right? They're trading with a blindfold on. Learn how to build proper trade plans before even getting in. And give you guys a quick little bonus. A trade plan consists of a few things: an entry, a target or multiple targets, and a stop loss. A trade plan also allows you to identify your time horizon on the trade. Based on your time horizon on a trade, you know, do you want to scale out of this trade or do you want to get all out? Also, based on the type of strategy in your plan, is this a trade that you want to scale into, or do you want to go all in at a particular level? And the most important thing is it allows you to understand how to get positioned on your trade, how many contracts to take to not lose a certain amount of money on that particular trade. Trade plans are super important. All right, number 7, and number 7 actually ties into number 6, but number 7 is you need to learn how to become a good loser, eliminate the fear of losing and the fear of trading, and really be able to trade without hesitation. And so part of the trade plan process is accepting the outcome of the trade. Accept the outcome, okay? Like, what's your loss, right? You should already have that dollar amount figured out before you take a trade. What's the loss? What's the reward, right? Accept the outcome before you take the trade in the first place. That's going to allow you to trade without hesitation. That's going to allow you to remove the fear of losing to be a good loser. And overall, it's going to help you regulate your emotions in the market. And let's all be honest, like, emotions are why traders lose. They give into their emotions, right? You can actually regulate your emotions a lot better just by having a trade plan in place and then accepting the outcome of the trade ahead of time to, again, not hesitate on your trades, remove the fear, become a good loser, and just regulate your emotions a lot better. All right, so number 8, I think we're on number 8. Number 8 is going to be trade management, all right? Manage your trade, not your P&L, right? If you already built a plan and you've already accepted it, you know what your loss is going to be, you know what your reward is. Why are you looking at your P&L, right? So many traders stare at their P&L, and that causes them to do what? Cut their trade because they see some red when the trade never hit their stop in the first place, and then the trade actually goes in their favor, and that stems other bad habits, or they see they're up 100, 150 bucks, and they're scared that they're going to go back into the red or lose that, so they take the profit too soon, and they don't capitalize on their winner, right? People trade and manage their P&L. And that's one of the biggest reasons why traders are not able to capitalize on their winners and keep their losses nice and small and be profitable. They're too busy looking at their P&L fluctuate while they're in a trade. You don't need to look at the P&L. Look at the trade. Look at the stock. Look at the chart. Is it intact? Is the trend intact? Is the trade intact, right? Is there still good price action? Is it valid, right? Manage the trade. Do you want to start scaling out? Do you want to bring your stop loss up strategically to mitigate and lessen your risk, right? Look at the trade itself and how it's overall developing. Manage the trade. Don't manage your P&L. That's going to help you capitalize on your winners. And it's also going to help you not get prematurely stopped out, and then it's just death by 1,000 paper cuts. All right, number 9 is going to be log and journal your trades. I don't know why people don't do this in trading. It makes no sense to me. They just trade blind, right? And then they may have some winners, they may have some losers, and they're just trying to guess on what should I do next. Log and journal your trades, right? Be super detailed with the logs. Like, what was the setup? What were your confluences? What were your separate reasons to take a trade? Rate the trade on a scale of 1 to 10. Was it an A+ trade? That's a 10. Was it at subpar? That's a 5. Like, get super detailed and be super intentional with, again, logging and journaling your trades. And then again, journal your trades. We talked about logging, journal your trades from a mental standpoint, right? How are you feeling in that trade? Were you dialed in? Were you confident? Were you convicted? Or were you revenge trading, trying to make a previous loss back? Did you not sleep good the night before? So you were running on 3 hours of sleep on that trade that you lost too much money on. And so now you can go back and actually look at your journal for each trade and actually notice a trend. Do you notice a trend that on days where you take the most amount of losers, maybe you didn't sleep good the night before, maybe you didn't, jam on your morning routine and crush your morning routine, right? And then maybe on the days where you see some of your best trading days, maybe those are the days where you did get good sleep, right? Maybe you did crush your morning routine, right? You got to actually take a mental journal of the trade, not just the details of the trade, but journal the trade as well from a mental standpoint. And then number 10, which is the most important, is going to be treating trading like a business, okay? And what do businesses do? They collect data, they review data, and they make data-driven decisions to overall improve and scale their businesses. They don't just make blind decisions, they make decisions based on data. That's what you need to do. Treat trading like a business and start making data-driven decisions. If you do step 9 and log all of your trades and you're very, very detailed, guess what you have? You have data. Guess what you get to do with that data? You can review the data and make data-driven decisions. What do you notice within your what are the similarities with your winners? What are some of the similarities with your losers, right? What's one thing that maybe you could stop doing that's going to eliminate most of the losers you have? And then what's one thing that you could really put more focus on that contributes to your winners, right? Look at the data, review the data, and make data-driven decisions to grow and make more money in the market. So you do these 10 things in order and you perfect every single one. I can pretty much guarantee that you are going to be a better, more confident, more convicted, and overall, more profitable trader at the end of the day. Drop some comments below on what your key takeaway was from this video. Like it as well.